I recall a time in my youth when I accidentally swallowed a fruit seed. A friend informed me that a tree would sprout in my stomach, a burden I would carry for the rest of my life. This frightening notion haunted me for an entire week. This story parallels the doomsday prophecies often associated with financial markets and global events. These expert predictions often hint at a cataclysmic end, leading to the complete collapse of the financial world. Our journey begins in the 17th century, where the number 666, known as the number of the beast in the Bible, struck fear into the hearts of many Christians across Europe. They believed the world would end in the year 1666. The Great London Fire, which ravaged much of the city, was seen by many as a fulfillment of this prophecy. Fast forward to 21st December 2012. This date marked the end of the first great cycle of the Maya-long count calendar, which had tracked time for over 5,125 years. Some interpreted this as an omen of impending doom, with predictions ranging from a collision with the imaginary planet Nibiru to the end of the world. Yet, here we are 12 years later. During the crude oil crisis of 2008, I remember a market expert predicting that prices would reach $250 per barrel. Ironically, when prices plummeted below $40 during the COVID-19 pandemic, the same expert predicted a further drop to $20. We now know that neither of these scenarios occurred. More recent predictions of doom have centered around the implementation of the goods and services tax and its impact on the economy, demonetization, the infrastructure leasing and financial services crisis, and the ongoing coronavirus pandemic. These events have indeed caused temporary market instability, but the extreme scenarios predicted by market experts have not materialized. I had the privilege of attending a Berkshire Hathaway annual general meeting in April 2022. When an attendee asked Warren Buffett about the potential impact of a nuclear war between Ukraine and Russia on Berkshire's share price, Buffett responded that in the event of a nuclear war, the value of Berkshire's shares would be the least of our worries. Like a broken clock that's right twice a day, doomsday predictions are bound to occasionally hit the mark. There will always be a what-if factor in investing, as each year brings its own set of doomsday predictions. So how should we handle these doomsday predictions? One approach is to wait on the sidelines for the prophecy to come true before investing. However, as appealing as this strategy may seem, it is difficult to implement. You may have to wait a long time to invest, and once the predicted event occurs, you might not have the stomach to invest, or may decide to wait for a further correction. Liquidating investments because of doomsday predictions can be harmful to wealth, as it could result in a yearly cycle of buying and selling based on various prophecies. For long-term investors, however, the realization of a doomsday prophecy can present an opportunity to invest more. In summary, doomsday predictions have been a part of our history and will continue to be a part of our future. While some predictions may come true, it's important to remember that they often represent extreme scenarios. Instead of reacting impulsively to these forecasts, consider them as part of the broader investment landscape. Predictions of doom can create opportunities for investment and growth, rather than signaling the end of the financial world as we know it.